All right. I think few people know, few people do not know me. Just to give a very, very brief about who am I? Who am I? Uh, I am Bharat, and I have been in the markets for at least 13, 14 years now. So before that, I was an engineer. I was working for one of the top auto manufacturers in the world. Its name is General Motors. I was a design engineer there. Since from 2007 to 2016, I was a full-time engineer. Along with that, I was also doing my trading or learning trading rather than trading thing. So it took me almost 7 to 8 years. So my journey started somewhere in 2007, 2008 when I was almost in the final year of my engineering, where my uncle was an investor. So I tried to understand a little bit from him, and he taught me fundamentals, which hardly made money because I could not put big money with my salary. So that is when I started understanding something about technicals. Through my job, I had to travel to US, and that is where I met some very renowned traders who have been in the trading for at least 40, 45 years now. 1976, he started his trading. So he taught me, and a couple of others have taught me. And most important than that, what taught me was markets and my mistakes. So I am here for two, three people. I am here because of what I am today. And after 2016, I quit my job. I'm a full-time trader. I make a living out of trading since 2016. I'm absolutely an options trader. Plus, I also invest in long-term portfolios. Uh, what I learned and why I'm here is basically because of the mistakes I've made and because of the people who have taught me during my journey, right? So markets taught me big time, and a lot of people who have contributed to my understanding of the market. So with due respect to all of them, we'll start a session. So basically, this DeltaCapitis, very, very brief about DeltaCapitis, what we do. Basically, these are the products. I don't want to introduce this, but we have two products. One is an DC Edge. This is basically helps you in analysis. And DC Swift is basically going to help you in execution of your trades. How we will see it later on. No, this is not the time for that. Services, I am into a couple of things, but that is not important. Basically, we are a fintech company. We look at basically into developing tools. Because of engineering background, I develop tools. Because of my trading experience, I also basically give an opinion of the markets and a couple of things. So basically, that is a brief introduction. I'm also a corporate trainer for a lot of corporates like brokerage houses like Kotak and a couple of other brokers. So I train their pan-India dealer network. So that's a brief introduction. So let's not waste too much of time on this, and we'll quickly get into what we have to focus today. So basically, let me see how we can probably look at what the market's going to do in the next 5, 6 days. For that, we'll start from there are two approaches in the market. One is a top-down approach, and second is a bottom-up approach. Top-down basically meaning you come from international markets to national markets, from Indian markets, and from there you go to sector. From sector you go to stock and try to pick a stock where the action is happening. So basically, if the international markets are bullish, if Indian markets are bearish, so there is already a conflict between international and national markets or the Indian markets, domestic markets. So there is some problem there. So that's where we can pick both the trades. We can look at buying or we can look at selling also, because there is a conflict. International market says buy, Indian market says sell. So we can pick both. Few stocks will be pulled by the international markets and few stocks will be pulled down because of Indian markets. So conflict is there. Now there are times where there is no conflict, where international markets are also bullish, Indian markets are also bullish. That means international markets and the Indian market is both supporting on the upside. Now we will try to look at the sector now. And from sector, we come to stock. So this is what we call a top-down approach. Come from international markets, then come to the Indian markets, and then go to the sector. And from sector, you go to stock. This is a top-down approach. Second is bottom-up approach. Basically, you pick ITC is good. From ITC, you go and check whether FMCG sector is doing good. From FMCG, you go to Indian markets and see whether the broader sector is also performing better. And you find the correlation between FMCG and the overall markets, because FMCG is basically a defensive counter, which basically moves against the Indian market. So when a lot of people think that uh, the markets are not very strong, Indian markets are not very strong, if they feel little more concerned about the markets, the downfall in the markets, they will try to push money out of other investments and move into very safe sectors like FMCG, like ITC, HUL, because despite recession, despite any nonsense, we consume every day FMCG products, what ITC produces, what HUL produces. So basically, you have to understand the correlation between the sector and the Indian markets in the bottom approach. So you pick the stock, you go to sector and find the relation between sector with the Indian markets. If both are in sync and Indian markets are also doing well, then I think, okay, the markets are doing well. We can plan a bullish trade, or we can build a portfolio on the upside, not on the downside. It's bottom approach. Stock to sector, sector to Indian markets to international markets. Bottom up. That means you're coming from the bottom to the top. And second method which you're looking at is top down. That means you come from international markets to Indian markets and then sectors and then stocks. Basically, in stocks, there are about 3,000 to 4,000 actively traded stocks. I cannot basically look at all 3,000, 4,000 stocks. If on a whole, if auto sector is not doing well, why should I look at whether HUL is doing well or not? Whether Ashok Leyland is doing well or not? Because if sector is not doing well, there should be some news related to the entire sector. There is no point if Ashok Leyland is doing well, it is an odd man out. It becomes an odd man out because entire sector is not doing well, Indian market is not doing well. There is an odds that Ashok Leyland is doing well. So it may not work the way I expect it to work. So basically, if the sector support and international market support and national market support is not there, then the stock may be strong, but the performance will not be great. That is why we look at whether a sector is good or not. First thing is, this is what you have to understand. So basically, if I have to put this across, why I'm saying this is because you have to understand, let's not do a wrong understanding of the markets. Two approaches come from international markets. International, then come to Indian, then come to sector, then come to stock. If this is bullish, if this is also bullish, and if this is bullish too, then we try to pick. If the sector is strong, doesn't mean that every stock is doing well. FMCG is strong. FMCG is strong. Yes, not all stocks in FMCG is doing well. Pharma is strong, but not all pharma stocks are doing well. How do we do this? We will see that. If the stock is extremely bullish, in the sector, there might be so many stocks, maybe 5 stocks, 10 stocks. Not everything is doing well. We have to find the strong one here. Got it? Right? So this is what we call as a top-down approach. And then the second one we're looking at is the bottom approach. You move from stock to sector. If the stock is strong, check whether the sector is strong or not. If sector is strong, check whether Indian markets are doing well or not. If Indian market is doing well, just make one correlation, international market is doing well or not. So if yes for all these things, then you can pick this stock. Now what will happen is you have to look at 4,000 stocks here. From 4,000 stocks, there may be 10, 15 sectors. You have to confirm here, and then there's one Indian market. So from bottom approach, it becomes a very tedious process. So what I do is I come from here. Because I have to just check one. 15 sectors. Which sector is doing well? Real estate is doing well. IT is not doing well. Forget IT sector. Don't even look at IT stocks at all. Becomes easy because you can remove the entire stocks in that sector at all in one go. Otherwise, you have to look at Infosys, TCS, Wipro, other 30, 40 mid cap, small cap, and large cap stocks, and see, okay, in that there are so many stocks which are doing well, so many stocks are not doing well, doing well or not doing well, and from there you confirm with the sector. If the sector itself is bad, if there is something going wrong with IT stocks itself, IT sector itself, then what is the point of picking a good stock in a weak sector? Right? Weak sector is there. Good stock. Even because of sector weakness, stocks can be dragged down. Correct? If the sector support is not there, if overall market in the IT sector is not doing well, then there might be a chances that the entire sector weakness can be a reason for a good stock also being hammered out. Right? So these are the things you have to understand. So we will follow from top to down. Now to follow from top to down, now what is this? We will look at international markets. So first thing we are looking at is Dow Jones. So now what Dow Jones has done in the last couple of months, I'll move from weekly chart. What weekly has done See, there has been a struggle to break these levels, which is around 34,400. And now, and if on the downside in the last 3 weeks, understand this little more carefully, what is happening. This is a weekly chart, so each candle is 1 week. So this week the low was 32,970. This week low was around 33,000. This week, in the current running week, which we just ended yesterday, the low is around 32,970. That means last 3 weeks, we have seen market rebounding from 33,000 levels. So this is a very critical support. Very critical support. This is a resistance. So market breaking this only and only if the market breaks above 34,000 levels, we will see a very good move. Very, very good move. But otherwise, what I see is this is a range bound market for me. Range bound market. Last 3 weeks low is around 33,000 and last couple of months of high is around 34,000. So basically the international markets are basically sitting in a sideways mode. 33,000 on the downside, 34,000 on the upside. This is what my price is telling me. Now what is momentum is telling me? Momentum is also sideways. RSI resistance is 60, support 40. This is basically RSI 60-40 is basically sideways market. So this is also telling me momentum is telling me sideways. The price is telling me sideways. It's a 5-step process: price, volume, momentum, volatility, and time. So we look at 5 different aspects in technicals to understand the trends. In that, we are just considering only price and momentum for this session. Resistance here, resistance here, resistance here, resistance here. So this market has a tough time breaking 33,000. And now support, last 3 weeks support is 32,000. So we'll say this market is basically sideways. And now in the sideways market, what is the strategy we have to use? In sideways market, we have to do this. We sell at the high, buy at the low. Sell at the high, buy at the low. That's the only thing we can do. Now, where are we? We are at the lowest point of this market. So from here, there could be a chances where it touches 34, 33, whatever this level resistance, right? So basically, since we are at support, in the last 3 weeks, we have seen markets supporting at 30,000. So I will probably go long with a target of 34,000, stop loss below this, sideways market. And here I will exit my longs, think of shorting. So basically international markets is not bearish. So basically what this market is telling me that there is absolutely no concern of big fall in the market. Even if the big fall comes, this market will find support around this level. So international markets is not posing any threat either on the upside nor on the downside. I will change my view only if the market breaks 34,000 or breaks 33,000. Till then, I will play sideways. That means I can choose bullish, I can choose bearish also. By Bharat, why you can choose both? Because markets are sideways. Neither bullish nor bearish. That is what sideways means. So I can choose both. So international markets, no concern. Now we look at Nifty. What is Nifty doing? We will look Nifty from weekly chart. So what is Nifty doing? Basically, Nifty is struggling within the same range. Upside 18,500, downside, look at this. This fall came to this level, 16,800. This fall came to the same level, 16,800, 17,000 level. So basically, this has been a support, this has been a resistance. Now, where are we? So when the markets are sideways, what we should do? We should buy at support, try to sell at resistance. Now, where are we? We are sitting very close to the all-time high. Very, very close. So basically, since we are unable to break 18,500, see, first attempt somewhere last year, 2 years back, second attempt, third attempt, fourth, fifth. Now we are making a 6th attempt. This is a 6th attempt to break 18,600 levels. So do you think it will be broken in one go? Obviously not. So it will struggle somewhere here for a few months or maybe this is a weekly chart. So a couple of weeks, it might struggle around this area and then give a breakout, or it might give a sell off towards 18,500. Now, how will I choose this, Bharat? What will happen? So basically right now, look at the low of this, and this. All 3 weeks, the low is around 18,000 levels. That means the entire May expiry, Nifty has managed to hold 18,000 and above. But again, markets are not able to cross 18,450 or 500. So basically, again, Indian markets are also stuck like international markets within a range. But one thing you have to understand, right now we are sitting at a very crucial resistance. So if I take long here, my risk to reward is unfavorable on the long side. So if I take a long here, where is my stop loss? Too far away, 18,000 or even below this. But where is my target? My target is very, very small. So risk reward is not very, very favorable on the long positions. For a positional trade, I'm saying, I'm not speaking about intraday. Intraday is a very different ballgame. Again, RSI is also range bound. Why? RSI supported 40, resistance 60. So when RSI is playing between 40 and 60, it will be sideways action. So momentum also speaks about sideways. So basically this market is neither bullish nor bearish, but at a resistance where the risk reward on the long side is not favorable. So either I wait for dips or go to individual stocks. So there is absolutely no absolute bullishness or absolute bearishness in any of the markets that we've discussed so far. So we can choose both. In this, is international market bullish? No, sideways. Indian market bullish, but at resistance. At resistance. Risk reward on the long is not favorable. Can I short? Too early to short. When can I short? 18,000, last 3 weeks, 18,000 has been defended. So below 18,000, I have to change my view from bullish to short-term bearishness. I'm giving a view for the next week. So most likely that 18,000 will be held for this expiry. This May month, they will defend 18,000 because there has been absolutely a lot of money has been spent on the option side to hold 18,000 level. So as long as 18,000 is still intact, I don't worry. I don't worry. So basically sideways to bullish on Nifty for a long term, not short term. Short term is a different ball game. I'm giving a long term picture for next 1 week. So 18,000 becomes a support area, 18,400, 300 becomes a resistance area. So we are again struggling in a range bound market. Nifty is range bound, international market is range bound. So now we have to look at what stocks to pick. Because it is a range bound sideways market, I can plan my bullish and bearish trade also. If international market turned to be bullish, Indian market turned out to be bullish, then if some sector is bearish, I will ignore that. Because let's say if IT is bearish, why would I concentrate on a bearish sector in a bullish market? I may not make good money because the entire flow is on the upside. I am concentrating on the downside because of some weakness in sector. Rather than that, I will put my money in the upside because it will make better money because the money is chasing the upside. There's a lot of demand coming on the upside. Rather than concentrating on sell side, it might make money, but not as much as committing my money on the upside. It is not worth my it will definitely give you returns. Maybe on the downside, it will make you 4% returns, but upside, if you're committed, if you're gone with Indian markets, if you're gone with international markets, rather than choosing a sector bearishness, you would have made 10% returns. Here you're making 2%, 3%, 4% returns. So basically, this is how you have to understand whether sector support is there, market support is there, overall broad market support is there. This is what we understand from the top-down, bottom approach. Since both international and Indian markets are here and there sideways, I can commit my money on the upside and I can commit my money on the downside also. I can choose both. Now, which one to do? Before that, let me look at Bank Nifty also, what Bank Nifty is doing. One thing is we are at resistance. We are at resistance. When will the dip come? Look at when will the dip come. So this dip will come to the short-term moving average. This is one of my favorite indicators. So as long as the price stays above the short-term moving average, it is more or less bullish. If the price starts closing below the short-term moving average, you can experience a momentary sell-off. Now, where are we? We are still above the short-term moving average. As long as the markets are above short-term moving average, we can still think of bullishness. If start closing below this around 18,000 levels, this is where I expect some kind of correction. So for me, to rest my long positions or to change my view from bullish to a short-term bearishness, 18,000 remains the key. 18,000 remains the key. So 18,000 is a deciding level as far as technicals are concerned. When will I turn overall bullish? When the market starts crossing this. But will it cross? We'll have to see whether This has enough strength to cross. If this market holds above this, if this price holds above the short-term moving average here, there is a higher probability of market breaking out this way. So if market stays above this short-term moving average, there is a probability of market breaking out from here. So we have to see whether markets can hold above 18,000. So if market holds above 18,000, Bharat, why are you saying 18,000? Understand this. See, market came to 18,500. See, price is only a consequence of demand and supply imbalance. Price is only a consequence of demand and supply imbalance. Who creates demand is a buyer who creates demand. Who creates supply is a seller who creates supply. Buyer may have n number of reasons to buy. You might have a very good quarter results. You might see economic data is very good. You might see n number, or somebody told him. So the reasons for buying, the reasons for selling could be fundamentals, could be technicals, could be emotional, could be international markets, could be war. We do not know. That is not important. Why is not important for us? What is he doing? Is he buying and contributing to the demand side? Is he selling and contributing to supply side? If the demand is more, basic law of economics, prices will go up. If the supply is more, basic law of economics, prices will fall down. This you have to understand. Now, when the market start falling from here, that means supply was more than the buying. Now, from 18,500 levels on Nifty, there was some selling. Sellers were strong. They sold it to 15,000 levels. Strength from 18,500 to 15,000. Good amount of supply. Because the extent of fall depends upon the magnitude of the supply. Correct? Magnitude of the supply. Whether I create 1 lakh supply or 1 crore supply, that quantum of supply decides the quantum of fall. Higher the supply, higher will be the fall. It's like this. If in a day, if the consumption of mangoes in Bangalore is 1000 kgs, consumption is 1000 kgs, and if the supply is 500 kgs, price will shoot up because supply is less, demand is more. If the supply is 750 kgs, prices will soar up, but not as much as when it was 500 kgs. Because supply 500, demand is 1000. Supply 500, price may double. Demand is 1000, supply 750, price will not double because there is little more extra supply. Demand is 1000, supply is 1000, price may not drop. Price will stay. If the demand is 1000 and supply is 1500, price will obviously drop. So basically, if you understand, the price movement up and down depends upon the difference between the demand and supply. That's what I said. Supply demand matters a lot for us. Now from here, the sell-off was strong and they sold it to 15,000 levels. Second time, the sell-off was not so strong like this because they could only sell it to 16,000 or 17,000 levels. Now again, we are back to this. If this sell-off is not so strong and they hold above 17,500 levels, that means each time the selling is happening, big supply, smaller supply, even more smaller supply. That means supply is draining out. Selling is not as strong as it is. Now the probability of a breakout above 18,500 increases. Simple supply and demand, understanding the price. Right? So by going by this, if I am expecting the market to break 18,600, which is the all-time high, I want the market not to go below 17,500. If that happens, next move, there is a higher chances that 18,500 will be broken. So let's hope that this sell-off that is seen in this week, this red candle, it is not below 18,000 or 17,700 levels. Why 17,700? Because these three candles low is around 17,600. 18,000 becomes the first support, 17,600 becomes second support. So as long if 18,000 holds, then the probability of market testing 18,500 increases. If market gives a breakdown and holds above 17,800, that means the next rally, it tends to break this out. So 17,500, 18,000 are two support levels for the market to break 18,500 levels. That is what you need to understand from this. Do I make sense? Yes. I'm taking a little longer to explain this.
Yes.
Right? That is okay. Now look at Bank Nifty. Bank Nifty, we are back to resistance and all-time high levels. For a change, RSI is not holding at 60. RSI has managed to break 60. So I have been telling you, if you're following me on a weekly market review, I've been telling Bank Nifty is relatively stronger than Nifty. For so many reasons. Because on the Nifty chart, you saw a bearish candle, but in Bank Nifty chart, we didn't see a bearish candle at all. It is still a bullish candle. That means banks are outperforming. So 46% of weightage on Nifty is from the banks. So banks are outperforming. So there, if it, and as long as the market sustains last 3-4 weeks low, take a monthly chart and see where is the low. See this? As long as the market sustains above 40,000, there is a higher probability of market breaking above 44,000, making all-time high. So for me on the Bank Nifty, 44,000 is too far away. If I have to find a even better level, I'll go to daily chart and see where exactly can I take a support. How long I can hold a long position, or how long can I still be holding on to my bullish view. Is look at the low of last 15-20 days. Where is it? 42,000. So as long as the market sustains above 42,500, I will still hold on to my bullish view. So this is the key for me. 42,500 is the 42,500 is the level. As long as the market sustains above 42,500 on Bank Nifty and 18,000 on Nifty, the probability of market breaking a all-time high increases. So that is where we have to understand. So Nifty, Bank Nifty, bullish, no doubt, on a longer term picture. Where I will rest my bullish view. Where I will rest my bullish view is basically at 18,000 for short term, and for the long term 17,500. This is where I rest my bullish view. On Nifty, Bank Nifty, 42,500 is where I will rest my bullish view, and I'll change my view. So these are the very important crucial levels. So basically, if you see last 3-4 days on Bank Nifty has been holding above this. Look at the low of Monday, Tuesday, Wednesday, Thursday, Friday. Wednesday low, Friday low, both around 43,500. If you're following me on YouTube, you got the view also. We were on dot with our analysis. The only concern for me is being a momentum divergences. RSI showing divergence. It is showing a momentary loss in the upside momentum. Now, when that momentum will be removed, when the momentum will assume itself, see, I have drawn a trend line using the peak of this and peak of this. So now if the momentum RSI breaks this out, this will resume its up move. So basically, we will have to wait for this. So basically, I am holding on to the bullish view, no doubts. So for this week, what I'm expecting, see, markets are unable to go below 43,400, and markets are unable to break 44,000. Basically, again, Bank Nifty is settling sideways for this week. So basically, wherever you go, I cannot be absolutely trended, neither bullish nor bearish. As an option trader, if you think, I would probably look at creating a little bit of a neutral strategy. Neither extremely bullish nor extremely bearish. My extreme bullishness happens if this breaks above 44,100, 150 levels. My extreme bearishness will happen for this week only below this. If 43,500 breaks, I will expect 43,000, and next stop is 42,500, because that is a very important support. Why? This is the next support because this up move started from here. That means some buyers have sitting here. If this breaks, then this is where it is. So basically, as long as the 43,500 is intact and 44,000 is intact, within this range, I will keep market sideways. Correct? So this is a broader view. Now we look at what we look at is sector. Okay, since markets are basically sideways to bullish for the next week, what should I do, Bharat? We will look at the sectors. Dow Jones is clean, no doubts. Nifty is clean, no doubts. Bullish to sideways, bullish to sideways. 18,000 crucial, 17,500 is the next crucial point. Bank Nifty 42,500 is a crucial point. Before that, 43,500 is a crucial point for this week. So as long as these are intact, I will be bullish to sideways in this market. Bullish to sideways in this market. Now 44,000 remains a key because 3 times it pushed to cross 44,000. There's been a failure to cross 44,000. So if you want to be absolutely sure of your long positions, only above 44,000, you have to think of bullishness. Till then, sideways. If you would think of bearishness, below 43,500. Within this, you play both sides. That means you buy here, sell here. You buy here, sell here. 43,500 buy, 44,000 exit. 43,500 buy, 44,000 exit. Keep taking this 1%, because that is the only way we can make money in the sideways market. Having said this, what I will do is I will start going into sectors. Let's see what sectors are telling us. Since it is divided, neither bullish nor bearish on both the sectors and also international markets. Now what I look at is we will look at sectors where if I can choose both bullish and bearish sector. Now I'll go to one of my favorite way of looking at sectors. Now this is a comparison. This green red candles you're seeing, that is not a price. That is basically a comparison of Nifty with Nifty Pharma. This tells me if this is falling, this tells me Nifty is doing better than Nifty Pharma. If this is falling, Nifty Pharma is doing bad. Nifty is doing well. That means it is better to put money into Nifty 50 than Nifty Pharma. So basically, since Nifty Pharma is doing bad compared to Nifty 50, see, I have an option to buy Nifty 50 stocks. So there are two options. Bharat, should I buy Nifty Pharma or should I look at Nifty? How can you buy Nifty? ETFs, you can buy ETFs. There are a lot of ETF exchange traded funds where you can directly buy Nifty 50. But should I do a little bit of extra buying in Nifty Pharma? Now this is where I look at Nifty Pharma comparison chart of Nifty Pharma with Nifty 50. It says Nifty Pharma is doing relatively bad compared to Nifty 50. That means Nifty Pharma is not a good choice. As per this chart, there is no strength in Nifty Pharma. Now we'll try to find out where is strength. Which sector has strength? I look at Nifty 100, which is doing well. Now this is sideways. It is slightly above this red line. So if there is above red line, it is neither falling nor above. Basically, Nifty 100 is doing well, or it is on par with Nifty 50. In Nifty 100 has Nifty 50 stocks also. Understand this. We will look at Nifty Midcap 100. Is midcap doing better? Yes, if you see, midcap is going higher. It is making higher highs and higher lows compared to Nifty 50. So midcap is doing well. Compared to Nifty, midcap is doing well. So I can probably think of midcap stocks. We look at small cap stocks. Is small cap doing well? Let's find out. Let's compare small cap versus Nifty 50. You'll understand this. Nifty small cap 100. See, I finished sectors or Indian markets, international markets. I'm going to sectors. So what is the inference from looking at Nifty, Bank Nifty and Dow Jones and other things? It is telling me both the markets are sideways to bullish. So Bharat, you can pick both, preferably on the upside. That's what it is telling me, because sideways to bullish, not bearish anywhere. So Nifty small cap is doing better than Nifty 50 actually. So basically, the large cap and small cap are outperforming Nifty 50, which is a large cap stock. That means I have to concentrate on the mid cap and the small cap sector than looking at Nifty 50. But how to do it? Very simple thing. You can directly go and buy Nifty Bs, mid cap Bs and small cap Bs. There is an option to do it. Right? If you go to any, just give me a sec, Zerodha or any other thing, any other broker. You should do not trade in this, because there are a lot of other issues for a trader like me. not very reliable these days. There is a way of picking Nifty mid cap. See, there is a mid cap select. So there are a lot of exchange traded funds for these things. Okay, ETFs for mid cap stocks. There are sector based funds are there, or you can look at mutual funds list of mid cap ETF stocks here. It is asking for a lot of things. See this potential mid cap, a lot of mid cap stocks. You can choose do little more skewing on the mid cap side. That is what this study tells me. Now, Bharat, should I concentrate only on the sector like this, or should I look at some different sector where I can directly invest? Let's look at auto. Is Nifty Auto is better than Nifty 50? This chart tells me whether it is which is better. Nifty Auto is better or Nifty 50 is better. Why Nifty 50, Bharat? Why Nifty 50, Bharat? I can directly go and buy ETFs, na? Nifty Bs. Nifty Bs are sitting here. Sir, how do I buy Nifty into? Sir, Nifty is only. It is not a stock, sir. Nifty is an index. How do I buy for my portfolio? This is Nifty Bs. You can buy. You can buy one, and the investment for this is as low as how much? 199 rupees. So if you have 200 rupees, you can directly go and buy 1 unit of Nifty Bs. Right? If you want to buy 10, so you can this will stay in your portfolio. Yes, Nifty Bs is your portfolio. That means you are trying to buy Nifty 50 stocks with as small as 199 rupees. If you want to buy 10, yes, you can do that. Right? The investment can be very, very, very low to buy Nifty Bs. To buy one unit, it costs you 200 rupees. So 200 rupees, you can go and buy Nifty Bs. What Nifty Bs ETF means what? I'll take some sessions to find out explain what is an ETF. You can probably search what is an ETF. You'll understand. Not a big deal. I have to look at stocks which is doing well. Now, I'll show you two methods of doing it. Of choosing a stock. First, I'll go to sector, top-down approach, and then I'll do a bottom approach. So Nifty Auto. So Nifty Auto is doing well. Compared to Nifty 50, Nifty Auto is doing well. So it is worth looking at Nifty Auto stocks. Now what I will do, since Nifty Auto is doing well, because it is rising compared to Nifty 50, there is enough reason to look at, because Nifty 50 is bullish to sideways. Nifty Auto is outperforming Nifty 50. That is what this is telling me, this stock. Some other day I will do what is this study means. This basically tells me that Nifty Auto is outperforming. Now in Nifty Auto, not all stocks may be outperforming. There may be few. We'll find out which one is good for me. So Nifty Auto looks good. So which one in Nifty Auto? Let's start from Ashok Leyland. See, doing well. See this? It's doing well. Now we are at a resistance area. Why? See, this stock told this told me that Nifty Auto is outperforming Nifty 50. How do I know that? Look at this example. How much Nifty has gone up in the last 10 days? Not much. It is in the last 5 days, how much Nifty has gone up? Hardly 18,000 to 18,304. It is struggling in this 300, 400 point range. 1 or 2% is struggling. Whereas Ashok Leyland, see, it moved from 140 to 154. It is close to 7-8%. So Nifty hardly moved 1 or 2%. Ashok Leyland moved about 7 to 8%. This chart tells me that this outperformance. This is what outperformance means. Now, Bharat, is it good to buy? Auto is good. First thing is auto is good. Bharat, shall I buy here? If you buy here, last couple of months, whenever market came to this level, there has been a sell-off. It's a resistance area. So now I don't want to buy here. I would wait for if I want to buy, let's say I want to put 50,000 on, let's say 10,000 on Ashok Leyland. You put 25 to 30% of that. Now wait for a small dip to the support area. 147, 148. So you buy 30-40% now, and if you see a dip towards 146, 147, you add extra. So Ashok Leyland becomes good, but not immediately, because it has a resistance. Because it is a resistance area. Ashok Leyland is good, no doubts. But buy small quantity, wait for it to give a dip, one more opportunity to buy at a discount at 146, 147. That is what this chart tells me. Not immediately buy, very small quantity buy, test quantity, wait for it to give you a dip. Ashok Leyland, after that Ashok Leyland, Exide Industries, all auto ancillaries. Exide Industries, battery. See this? All momentum is there. Now what should I do? Bharat, what will I do? Don't buy here. You wait for this dip, because usually what happens is, see, this is a resistance area. If the resistance breaks out, it will give you a dip to the same resistance area. See, this was a resistance area, right? Why resistance area? Because market went up and fell from here. That means there is some resistance for this. So once this resistance breaks on the dip, the same resistance area becomes a support area. This is called as change of polarity in technical analysis. Now, what is the recent resistance area? This one. Why? There were 3-4 attempts to break 192. Finally, it managed to break. Now, by the concept of change of polarity, this usually gives you a dip towards 192, 193. So Exide Industries becomes a very good buy at 192, 193. There's no immediate trade there also. Exide, Motherson Sumi or Ashok, Maruti, we'll look at big stocks first. Maruti is good. Maruti is good. Why? It is giving me a change of polarity. See, this is a resistance area. By going by concept of change of polarity, this was a resistance. It broke, and now a dip is coming. The dip, usually the old resistance becomes a support area. By change of polarity, I would start, Maruti becomes close to immediate buy. Close to immediate buy is on Maruti. So for me, I would like, let me pull up on Excel. So on my buy list, I would pick Maruti, which is immediate, little or very close by it is, because of change of polarity here. Escorts. Escorts is also pretty decent. See this? At resistance, it will usually give a dip. And now if you see a little more closely, look at the low of this, and this. Low is here, low is here, low is here, low is here, low is here. That means this market is sustaining above this low, which is a support area, which is around 2000 levels. We are at 2000. So I will buy at close to 2000 levels. Between around 2000 levels, I will buy. Right? I'll put a stop loss below this 1930 levels. So Escorts is also close to buy. The price is 2000. So for me, entry level becomes 2000. Right? This becomes pretty good. So look at this. We're all finding a good stocks here because everything has a support area. Eicher Motors. Eicher Motor is too far away because there is a certain logic where I buy, but based on that logic, my logic was here to buy 3,300, but it's too far away. It's 20%. You can, I don't think it is worth buying now. It is good, but immediately the risk is a little higher because it is too far away from a support area. I will give it a pass and will wait for it to dip. Mahindra and Mahindra. Mahindra and Mahindra is good. Why? See what happens here. This was a resistance. It broke. Dip came. And markets are bouncing off from the same support area. Mahindra and Maruti are lovely stocks. I will put a stop loss below this, which is around 1210, 1200, 1250 I'm entering. Right? This is beautiful. I like Mahindra because it's very close to support area. Right? This is very, very close to support area. I like this stock. So Mahindra and Maruti both look pretty decent. I love Mahindra more than the Maruti because it is very close to support area. So entry somewhere now, tomorrow, Monday morning, I will put a stop loss below 1200 levels, right? So my stop loss, 1200 levels. Any other auto stocks we missed? Motherson, Sumi. Give it a pass. Still there. MRF, all the manufacturers are too far away. Not like it. Too far away from support area. Apollo Tire. Apollo Tire is already given a breakout. I would wait for it to come to this area to buy. So tires have already gone up. Balkrishna Industries, again tire. Now it is coming down to this area. So this area I'll wait. So not immediately. I will wait for this area to be tested. 2100 levels we'll see. Not immediately. I have better stock to concentrate. So Maruti and Mahindra looks far better. TVS Motors. Too far away. Too far away. Because it has broken this all-time high. I would wait for it to come to this level, which is 1164. Not immediately. Bajaj Auto. Again, too far. Look at this. This one chart told me that auto stocks are outperforming Nifty 50. Obviously, in the last 1 month, Nifty has not given this kind of returns like auto, right? See, 3,600 all the way towards 4,600. 30% movement in auto stocks versus 4-5% movement in Nifty. Hero Motor Corp. This is picking up, but we are at close to resistance area. So I think from the auto sectors, everything is looking good, but there is no immediate buy apart from these three. So I will concentrate on my auto stocks for buying side. Now we look at one more sector. Nifty Auto. Nifty Bank is obviously outperforming because though Nifty is falling, Bank Nifty is refusing to fall. That means banks are doing well. Which bank, Bharat? Let's look at Axis Bank. Is it good? It is good, but we are at resistance area. This is a resistance area. There's a struggle here. Resistance area. I don't want to buy here. I bought here, but no immediate buy on Axis. Bank of Baroda. B, Bank of Baroda. This is better. This is better, but with a strict stop loss below this. But we'll see if there's a better one to find out. This is okay. Bank of Baroda is okay. I'll make a small list. If nothing is there, we'll look at Bank of Baroda. Otherwise, we'll give it a pass. Bank of India. State Bank of India. Results happened last week, na? Friday, Thursday. So despite all those negative news, SBI is staying above this. See, this was a resistance area because it fell from there. So this area once crossed, it will act as support. So I can probably think of buying SBI around 560 levels with a stop loss below 540, 550. So basically SBI is not immediate, but around 550 levels is what I'm looking at, not immediately. SBI, ICICI. ICICI is doing phenomenally, but resistance area. See, whenever I'm entering, not necessarily markets are bullish. That is not a reason for my entry. My entry is risk reward is favorable. Again, how to find risk reward is favorable. It's again a big concept, but as of now, we'll focus on choosing a stock. HDFC Bank is struggling, so I'll give it a pass on HDFC. HDFC Limited, it's not part of bank, but I'm just looking at HDFC Twins. More or less sideways. We'll give it a side. SEC Axis Kotak Bank. Kotak, not very. I would have been happy to buy here than buy somewhere here with close to resistance area. I think banks will wait, because the problem is we are at a all-time high. It could be a problem if it doesn't work out for us, because our risk to reward is not that favorable sitting at this place. See, everything at a very compromising area. Problem is I cannot short because the momentum is good. I cannot go long because the risk reward is not favorable. Because IndusInd Bank, we look at probability and statistics here. IndusInd Bank has struggled to cross this area, 1240, in the last 1.5 year. Now, what is the probability that it will cross 1240? Right, so there could be some kind of a risk reward or probability of going long and me being wrong is high. So probability of going wrong and me being wrong is high if I take long here on IndusInd Bank. So basically, all the banks are putting the same scenario where we are at a very strong resistance area. Now we have a problem. Correct? So I would give it a pass on IndusInd Bank. It is not. I will give a pass on all the banks, though bullish. The risk reward is not very, very favorable to me. That is the biggest problem for me on the bank side. We look at some other stocks or sector. Nifty Bank, consumer durables. Consumer durables, how is it? I don't think I have consumer durables chart. I don't think I have consumer durables. Finance services, other than banks. Again, see what is immediately I can see here. The strength on consumer durables was there, but the strength is losing out here because every time it came here, it is falling. Again, we are seeing a red candle at the resistance. That means there should be again the same scenario there, because in financial services, I think most of the banks will come and couple of NBFCs will come, like Bajaj Finance and couple of things. Again, you will have a same scenario there also. Financials will have the same scenario. Let's push to FMCG. FMCG was slightly underperforming. Now in the last 2 weeks or 2 days, there is a outperformance here in this one. Though it is not absolutely bullish, but why I'm saying it might pick up from here, why it is at support, is because of this reason I'm trying to tell you. Now what is that? This reason. The strength chart is telling me whenever it came to this area, buy. Now we are back to this area and we see a green candle. So there could be some pickup on the FMG stocks. So which are the stocks we look at? Let's start from the big guy, ITC, HUL. It's too far away and it is not at support area. I would prefer to buy it at 390, 400 levels. Now it is little difficult. Hindustan, Unilever, tricky because we are in a very long consolidation here for a very, very long time. So if we pick now, there is a higher chances that we will be stuck here. We will be stuck here. So let it break out, or let's wait for it to come to 2400. Now if I buy, it may go within this range indefinitely. We do not know when it will break out. It means our money will be wasted sitting on HUL. Godrej consumer. This is good. Why this is good is it has managed to give a breakout. Then this we have managed to give a breakout above this, and a small dip is coming. So now for me, where is my buying area? Godrej consumer, around this area, somewhere around 980 should be good. Is it immediate buy? No. So let's not waste time on this. If it's immediate buy, then we'll focus. Otherwise, we'll give it a pass. Marico again. Marico has been stuck in a range for a very, very long time. So I don't want to waste my money sitting on a range bound stock. Give it a pass. My money is not worth it. Dabur India is bearish mode because we are seeing a lower rise and lower lows here. A small rally, sell off. Small rally, sell off. Small rally, sell off. So this is sell on rallies. It is not buy on dips. So give it a pass on Dabur. Nestle, and we look at Britannia. Nestle is pretty decent, not pretty decent, it is superb, but the risk reward of longs here is not good. So what I'll do is I will try to pick up at 20,000 levels, 21,000 levels. Is it immediate buy? No. Give it a pass because risk reward not favorable to assume longs here. If you're looking for a very long term, that's a different story. But Britannia Industries, Britannia Industries resistance area, market resistance area, you see a quick sell-off. There is a reason. Though markets were bullish, buying at resistance area is creating a lot of threat. So I would rather wait here. So basically FMCG not very, very favorable, except Nestle, which is out of our risk reward potential. So we will give it a pass to this also. So for me, finance service also doesn't look actually very, very great. Okay, but not great. And not a place where I can think of. IT, this was a low it made a couple of weeks back. Now we came to the same low and we are bouncing off. This is basically a mean reversion. Is IT planning for a mean reversion? Though it is not very strong, but some mean reversion is kicking in there. We'll look at if there is any stock which is worth looking at. Infi. See this Infi. If you have been following me a couple of days back, I called a bottom on this in the same Telegram channel. If you are following me, for the reason why I called a bottom on this is because of this volume. See, price, green candles, red candles will happen every day, right? But volumes will not happen every day. See, volumes were low, low, low. Volumes are low, low, low. And all of a sudden, there was a huge volume here. That means great buying or great selling has happened on that day. Now, it could be great buying or great selling. The price will tell me what happened on this candle. Look at the low and the high and the closing time on this candle. So you will see that low, high and closing in this area. See if this is in favor of buyers or sellers. In this area, you will be able to see. Compare the closing. What is the low? Low is around 1185, 1185. What is the high? 1261. Low is 1185. High is 1261. Where is the closing? 1258. Look at the closing. Compare the proximity of the closing price with the high and the low. If you see that, the closing is just almost close to the high of the day. That means from 1185 to 1258, there was some buying that has happened on that day. And the closing is in favor of bullishness, buyers. That means this was not a great selling. It was a even day. There was some result on the Infosys. So it was a big gap down of 10%, but no continuation. And now this huge volume candle becomes a support because somebody has bought on this day. Now market comes down, it doesn't break this low. So now my question is, Infosys resistance is here, support is here. Now if this breaks out, see again, if you go by the demand and supply, see this is a resistance area because went up and came down, resistance area. Market approach, so from this resistance area, there was a big sell-off. Again, market comes to same support resistance area. The sell-off is smaller. Third time it came, sell-off is smaller. Fourth time if it comes, if the sell-off is smaller, then this will wait. That means the sellers are not doing a very great job. It will give a breakout. So what I will do is, Infosys, I will buy above 1300 with a stop below 1240 for a target of 1000. Maybe this gap usually in the technicals, the gap usually acts as a resistance area. So the gap is around 1370, 380. That is the small trade you can think of above 1300, not immediately 1300, because it might struggle to break 1300 for another couple of days. But there is a higher chances of market breaking 1300 than going down because of this volumes. Volumes, peak volumes. Wipro is doing far better job than Infosys. Why? is because it has made a double bottom here. From technicals, we call it a double bottom. Breakout has happened, golden crossover, and the market are sitting above this. So basically, I will buy above 390 with a stop below 380. This is a better trade than Wipro. Sector support is not there, but sector, there is some volumes that speaks very differently. So Wipro looks good. So 390 plus we can think of buying with a strict stop loss around 375, 380. So this should be a good one. Infosys looks far better than, Wipro looks far better because it's already bullish. But why are you saying Infosys is not as great as Wipro? Because Wipro is giving a bullish structure with a double bottom confirmation. Whereas Infosys is still bearish, it's a dead cat bounce. So dead cat bounce returns are smaller compared to the stock which is already bullishness, showing a bullish strength. So TCS, give it a pass, it's still not great. So TCS, not in my radar. HCL Tech, it's not strong, but I'm seeing if there is any good stock sideways. Tech Mahindra, overall weak. Tech Mahindra sideways. So nothing decisive in IT. Wipro, we can keep it, but remember, so now, Bharat, should I go full strength on Wipro or partially? I would say partially because sector is not supportive. What are the odds of Wipro will outperform when its peer group is not performing? Infosys, TCS, HCL, Tech Mahindra, all stuck in sideways market. What are the odds of Wipro alone running, leaving behind all its peer group? Less. So now what I will do is, should I be overweight or cautious on Wipro? I would say cautious on Wipro. That is where I play with the position sizing. I don't want to leave behind Wipro. At the same time, I don't want to be very extremely bullish on that because sector doesn't support. This is where this is why the top-down approach makes sense. Sector support is not there. Overall market is okay. So since sector support is not there, I will not put my usual money. If I'm planning to put 10,000 in IT stocks, I will only put 3,000 or 4,000. I'll only commit partially into Wipro and no other stock. So this is about IT. Now, if I take a look at after the IT, media is bearish. So basically Z Entertainment, all the stocks will go for a toss. I don't want to even look into media because it's absolutely bearish. Metals are also more or less bearish. So Tata Steel, JSW, Jindal, all goes for a toss. Hindalco, even that also. Because there's no strength in that sector. Metal is not there. Oil and gas. Oil and gas I'm slightly bullish on oil and gas. 1 or 2 weeks back, I didn't reconfirm. Let me look at it. I'll directly go to oil and gas stocks. Reliance, Big Daddy. See this one? It has made a bottom here, double bottom. It has managed to break the resistance. Now, this most likely to find support around this area. So what I will do is I will look at buying Reliance around 2,380 levels here. Not for a big target. The target is hardly this because Reliance is underperforming for a very, very long time now. Sir, if somebody is coming, why don't you mute if there is some background noise, please? So Reliance is okay, not great, because Reliance basically has underperformed for last 2. This is how this typically works. It underperforms for a while, and then suddenly this leads Nifty. So right now, not overweight. Yes, you can buy a small quantity with a target of 2,800. ONGC is good because I remember faintly that this oil and gas is doing well. So see what happened in the last couple of days. Rally, come to this orange line, bounce. Come to this orange line, bounce. Orange, bounce. Orange, bounce. Orange, bounce. Orange, bounce. So basically, if I try to buy at this orange, it is good. So orange is the 160. So 160 is a place where I can think of buying oil and gas. ONGC. 160, not immediately. Wait for 160 to happen. IOC. IOC, this was a better place. Now it is too far away, stretched. See, there's something called as me. Why I am not buying here is basically, see, this pendulum, right? What pendulum does? Pendulum moves from this extreme to this extreme. What you will do is from this mean area, it will start traveling to one end. You think it will go to other end, but as and when it starts going away from this end, it is picking up momentum to come to the opposite end. So basically, it swings. So basically, what is moving average? Moving average is nothing but a mean. It's an average price. What is pendulum doing? Pendulum mean position is here. If you suspend, mean position is here. This is one extreme. This is other extreme. If prices move away from mean to the left side, it will come back to the mean. If the price moves away from the mean to the right side, it will come back to the mean. This is called as a mean reversion trades. Right? Now what is happening? See, this moving average is nothing but mean, average, mean, right? So if the price moves from the mean too far away, it comes back to the mean. If the price moves too far away from the mean, it comes back to the mean. So if the price moves too far away from the mean to the downside, it comes back to the mean. If the price moves too far away from the mean to the upside, it comes back to the mean. Now, where am I? This was the mean price. Now it has traveled too far away from the mean price. Though it is bullish, upside, the risk reward is not favorable because the probability of coming back to the mean and giving a better opportunity increases. Simple concept of swing, pendulum, swing, swing, we play, right? So it is too far away from the mean, creating a long position here with a higher probability of coming back to the mean. That means I would get a better price here than here. So I will wait for it to come. So basically, if it is too far away from the mean, if you go to standard deviation, normal distribution, a lot of things will come where there is a distribution also. If you put a 2SD, 1SD standard deviation concepts, there is a different kind of a concept we look at why I'm saying no. So why I say no, again, it involves a lot of explanation again. That takes quite a long time for me to explain. As of now, it's bullish, but too far away from the mean. I will wait for it to revert to the mean to get a better risk to reward ratio. IOC, HP, HPCL, Hindustan Petroleum. I'm trying to keep concept simple because it needs a lot of explanation, but I'm just keeping it pretty simple. This is, it traveled too far away from the mean. Now it is reverting to the mean. So this is the mean price. I will try to buy around 245, not immediately. So I'll give it a pass. BPCL, too far away from the mean. Let me come back to the mean. So it is coming towards the mean. So the journey has started to travel towards the mean. So 350 we will see. More or less oil stocks are all bullish, but it is not at a favorable place for me to immediately take a long position. I think I have better stocks like Mahindra, Maruti and Escorts, Wipro and SBI. Little higher position sizing on these stocks, smaller here. This is also okay. SBI is also okay. So this is what oil is. Real estate. Pharma, real estate, realty. Real estate is pretty good, decent. Not decent, pretty good. So there are only two sectors which are outperforming. Realty, oil, and auto. Nothing else looks good. So now we look at each of the stocks in the realty sector. DLF. Way too far away from the mean. Superb strength. But if I take long, the probability of coming down is higher than probability of going far away because it cannot stretch too far away from the mean area. It cannot stretch too far away from the mean area, though it is bullish but not immediately a buy. So Godrej properties. This is good. Godrej properties had moved far away from the mean. Now it reverted to the mean. Now we are at a support area. Why? See, market, this was a resistance, small resistance. It broke. Now this resistance likely to become support area, and also it is close to the mean. So I would try to buy close to 1260. Godrej properties. So close to 1260. It is better than DLF in terms of risk to reward. Any other large cap? Oberoi Realty. Oberoi Realty. Yeah, see this? This is good. Travel away from the mean, come back to the mean, travel away from the mean, come back to the mean, and now we are traveling away from the mean. So this is a very good area to buy. Oberoi Realty below 900 is a stop loss. Oberoi Realty is good. Oberoi is good. Stop is 890. It looks good buy. So tomorrow, if market starts going trading above yesterday's high, I will think of buying. Right? Target 1000 levels. Any other realty stock that I missed? We can look at ACC and all those things also comes to the same area. ACC, give it a pass. Ambuja, this is all construction only, right? Which aids realty. Ambuja looks pretty okay. Because see this here, it started going above the mean area now. It is at support area. So this was a resistance area. It broke the resistance. Now it could become support. So Ambuja cement looks good compared to others. Ambuja looks good. I'll put a strict stop loss below 375. To this, we have to add momentum. If whether big move will come or not, that is a momentum study. Again, I will not be able to do that momentum studies here. Ultratech series, good. Mean, revert. Mean, revert. We are back to mean. Probability of reverting. See, market is always a probability game. What is the probability of market going up versus probability of going down from here? This we look at probability games because there's no 100% sure. It's all probability. That's the reason we put a stop loss. Ultratech. So realty looks good. Stop loss should be below this 7,400. You can put a stop. So there's stocks where we can probably concentrate. Ultra say Grasim Industries again into, yeah, see this? Bullish. Come back to mean, revert. We are back to the mean area. So if market starts trading above yesterday's high, Friday's high, this looks good with a stop below 1,680. Grasim looks good. Stop below 1,680 on a closing basis, not spike. Closing basis below 1,000 to 1,680 is better. Yeah, you can give little leeway. 1,670. 1% here and there, we can take a leeway there. So this is what I probably look at. So no other sector looks good in terms of sector analysis because it's a realty last one. And that most these are all stocks. Now I don't look at stocks unless until there is a reason for me to look at this stocks, which is indicated by the sector. If sector looks good, then I look at the stocks. Otherwise, I don't even look at it. So this is one way of looking at it. Wherein there is other way of looking at it is where we directly look at the momentum. That momentum is basically seen from some other studies where we look at volume speaks data, where extraordinary volume has happened. Because as I told you, price is only a resultant. Price only resultant of what? Demand and supply imbalances. So if I'm studying demand and supply, I will know what is the action on the price most of the times. Now in Bata has seen a 722% increase in volume yesterday. This is yesterday's data, 19th. Something is happening, unusual is happening in Bata. What is happening in Bata? I do not know. Let me find out. This only tells me where the momentum is, where the money is flowing. Because whenever money flows, there's a huge buying. When a huge buying or huge selling has happened, volumes will spike. And this tool will create or select the stocks where the volumes are happening. Because volumes are the key. Amount of buying, amount of selling, that is what volumes are, right? So Bata India is showing some extraordinary volumes. Let's look at Bata India. It's BSC. Let's look at NSC. NSC. This is bearish. Huge volumes are there, but the closing is not favor of upside. It is downside. So I will not sell right now. I will not even buy. I'll give it a pass. It is basically bearish. Ramco Cement. See, Ramco Cement is part of realty again, more or less. So since other cement stocks were good, see this? Breakout. It's a very good breakout. It has managed to break very strong resistance. See, I told you real estate stock is doing well. We picked up its peer group. ACC, Ambuja, Ultratech, Ramco Cement is doing, it has given a breakout. So now if there is any dip towards 816, I like this stock, 816. Around 816, I will buy Ramco. Beautiful stock. Momentum is also there. Somebody is putting money also. Now somebody bought. See, the buying could be intraday or positional, or they were taken delivery also. To find out that, you click on this chart will open. It will tell you the delivery percentage also. How much is delivery? See, intraday buying can also create volume, but delivery matters to me, right? What's happening? Is it down because some... I'll go to my old tool. Give me a minute. So there was volumes coming up from Ramco. I want to find out whether it is intraday volume or somebody took delivery also into their portfolio. So now Ramco Cement. See, this is the below line, the yellow line is a delivery volume. What is the percentage of delivery that has happened yesterday? Delivery is also extraordinarily high. That means the volume that you're seeing is not just intraday volumes, it is also delivery that has also happened. See, somebody who has taken delivery, why it is taking delivery? It could be giving delivery also, but it's taken delivery because the closing is in favor of bullishness. See, this kind of volume, look at the volumes here. Volumes is pretty good. 6819595, 6,81,000 or 68,19,000. 68 lakh volumes cannot be created by you and me. It is big money. So when the big money is backing Ramco Cement, they will ensure that market will go up from here. So big money is backing this. So big money is backing this. That means the big money will ensure that this market will go up. So Ramco Cement looks good. Any small dip towards 800 levels or 774 levels, if at all, if you and me are lucky, if we get this, we will buy it. Not immediately. Please do not buy immediately because it is extremely, extremely high. There is a probability of people buying this, booking their profits after this kind of a move. So that profit booking, people will not sell. See, there is two different kind of selling. Selling to ensure that market falls, selling to book their profits. So in this kind of stock, there will be profit booking selling, not for a bearish move, profit booking. So people who have missed this rally, so as soon as the market comes down, they are waiting for it to buy because it is too far away or the risk reward is not favorable like me. As soon as the market comes down, as soon as the profit booking fizzles out, the fresh buying will start. So fresh buying most likely to start around 800 levels. So wait for it to come to 800 levels. Beautiful stock. It will usually go up from here on. So we will look at McDowell's. Some extraordinary volume has happened on McDowell's. Click on this chart. It will show you what has happened. Bullish. See, good volume, good delivery. and it has managed to break a inverted head and shoulder pattern. Good. McDowell's is good. These don't belong to straight away sectors like any of those. Maybe FMCG sometimes. Left shoulder, right head, and the right shoulder is forming. A inverted head and shoulder pattern is seen. It is going up. I love this stock. Looks good. Not stock. I like the setup. Looks good. McDowell's is pretty good. McDowell's most likely going to fly. McDowell looks good. Put a stop below 775 and buy this. I like this setup. The yellow ones, I like the setup. Why? Again, see the end. If you want to pick this stock, you have to look at a lot of aspects. You have to look at fundamentals, all those things. See, whether you do fundamental study, you do economic study, you do technical study, no matter whatever study you make, that is your study. I am least bothered whether you are studying through fundamentals, through technicals, through data, through economy, through some recommendation. I don't care. Whoever has studied a number of things, they will have to make a decision. See, because every study will end up in a decision making, right? Should I buy? Should I sell? Should I hold? These three are the conclusions you have to make after doing whatever study you want to do, right? After doing all the studies, you make these three decisions: buy, sell, or hold. Now, when you start making decisions to buy, you will not sit quiet now. You will act upon it. Now, when you start acting, it will show up in volumes. Because you might probably camouflage your study, what you are studying. How did you choose this McDowell's? You can hide from me. You can hide the technique. How did you choose? But you cannot hide the fact that you bought it. And you cannot hide the fact you took delivery. You cannot hide the fact that you created huge volumes. So if you look at volumes, you know a lot of people are interested. Why they're interested? It could be fundamental factors, it could be news, it could be quarter results. I don't care why they're interested, but they are interested. You can hide anything. You cannot hide their action. You can hide the reasons to act, but you cannot hide the act itself. The act is telling me huge buying, and this huge buying was strong enough to break the high of last 3-4 months. That means some big money has committed money to break out of last 4 months high, and this money is not small, big, and not even a single penny will flow without any. Not even a single penny will flow into the market without reason. There is a reason, and McDowell's has reason, which we do not know. It might come later on. I don't know, but the reason is there on the upside. I will put this. I love this stock setup. My experience, love this setup. Muthoot Finance. Give it a pass. Neither bullish nor bearish. Glenmark, it was bullish. I had bought it. Now I think it's time to book profits because too far away from the mean area. Adani, I'll give it a pass. UPL, odd man out. Adani Enterprise, I'll give it a pass. Techem, we already looked at Techem, Mahindra IT stocks. Balakrishna, part of auto. Zeal, media, no. Let's look at media. No, give it a pass. Nothing interesting. Voltas, it is still not there where I think. I think more or less this is where it is. Britannia, PV, looked at PVR. Media was bearish now, so bearish only. So I think these are list of stocks I'll be concentrating on. Nifty, Bank Nifty sideways, 18,000 support, 43,500 support immediately. If that breaks, slightly bearish view get initiated for a target of 17,500 and 42,500. This is the view. Bullish to sideways. McDowell's looks superb. Ramco looks good, but at this level, these are the stop losses. Wherever I think entry is there, I have given the entry. Mahindra looks good. It's an immediate entry. This is immediate entry now. All these are entries now. Couple of stocks. Ramco 816 is the stop. 816 is the entry price, not stop loss. Around 816, around 800 levels, let's assume. So basically, McDowell's Mahindra looks pretty good for me. All right. So this no selling because there was no selling setup anywhere. All right. I hope any questions?
Hi, Bharat. BHL.
Yeah. BHL. Hope you are able to understand what I'm saying. Everybody is with me. BHL. BHL, though bullish, but nothing interesting setup. That is that I look at. Nothing interesting. I have better options like McDowell's and other things. We'll look at Larsen.
Thank you.
Larsen and Toubro. L&T. There is a gap down here with huge volume. So some selling and profit booking is happening. We will see how it behaves here at support area, but nothing immediate, nothing very concrete on L&T also. Anything else?
Hi, Bharat. Manish said, can we check Mastec?
Mastec. Looks good, sir. Looks pretty good.
Okay.
Yeah. I would buy with a stop loss below 1,750, 1,700 levels.
Tata Power, sir.
Huh?
Tata Power.
Power.
Yeah, Tata Power.
Tata Power. See, even if I buy, there'll be a struggle to cross this. Because there's a struggle there. So there's a likelihood to break out, but it might take another 1 month, 2 months, or 5 days, 10 days. We do not know how long it takes to break out. Setup is there to break out.
Okay.
But I will concentrate only if there is a confirmed breakout. Why waste time sitting on stock which may underperform? It's good, but wait. Done. So was the session helpful? 1.5 hour session?
Yes. Very helpful.
Yes.
Very good session, Bharat.
Thank you so much. So I'm planning to make this
Yeah.
every week. All right. So we'll see. We'll try to
Okay.
pick the stocks together and we'll make some best use of trades.
Yeah.
All right. All right.
Yeah.
Then I think we'll take a break for the day and we will meet next week. I'll make this recording available if somebody has missed it.
Yeah, because it helping me a lot after I'm coming back to
Yes, ma'am. Yes, ma'am.
trading. Yeah.
Yeah.
So it helps me a lot.
Sure,
Thank
sure, ma'am. Thank you. Yeah. All right, then. I think we'll take a break for the day.
Thank you, sir.
Thank
Good
you.
night.
Good night.
Thank
Good night.
Thank you so much,
Thank you.
Bharat.
Yeah. Put a spread.
Thanks, sir.
Put a word across your friends now who are interested. It's help. It's going to help them also.
Sure.
Yeah.
Sure,
Please.
sir.
Yeah.
Bye,
Please.
sir.
Thank you,
Bharat,
Thank
are
you.
you going to upload into YouTube also?
Yes, I will do this uploading.
Yeah, you share the link also in the group.
Yes, I'll do that. Yes.
Thank you.
Yeah. Thank you.
question. Thank
Yes. Yes. Yeah.
Sir, do you have any courses on like quant finance?
Some.
Quant finance, anything?
So a lot of people are not coming there to quant finance side, sir, because when they say quant finance is a very large topic. So I have to look at programming, data analytics, statistics, mathematical models.
Like how you are statistical and data you were.
Yeah, stats,
understood it.
math. Again, we go stats. We look at time series analysis, regression analysis. A lot of things will come. So now everybody is at the level where I can discuss statistics.
Then
Right.
if there is anything.
That is the problem. See, time series analysis, price analysis, time series, a lot of statistical concepts will come, regression analysis will come. So a lot of things will come in terms of statistical, mathematical models. You teach mathematics, you teach statistics, then you look at data analytics, data analysis, how to clean the data, how to analyze the data, and then you use programming skills like Python to code. So when you look at quants, it is a list. Let's say at some point in time, I'll plan. Nothing immediate.
So let me know whenever you plan. Get a course.
I will. Yes.
I'm already half the way in that, but I need to learn it like from you.
Sure, Rohit. I'll do it. Yeah.
Thank you, sir.
Thank you. Thank you. I think good night. Have a good weekend.